What's going on, everybody? Michael Silva here. You're watching the Daily Stock Market Brief. I do these videos Monday through Friday, 5 days a week. We look at multiple indices. We use technical analysis, going over multiple time frames. I keep it easy. I keep it light. Then we go over some indicators or some signal charts. Then we also look at yields, the dollar. We get a good view of what's going on in the markets to really determine, should we be going long here? Should we be pulling back? Or what just might be taking place next? It's to prepare you for the inevitable stock market crash. No, I'm just kidding. Let's go ahead and get into today's show. All right, everybody, welcome back. The Dow Jones today hit 30,000. Trump came out and made that announcement himself. It seemed more like one of those, and I posted this on Twitter. If you don't follow me there, follow me there. It sounded like it came out just to say basically like, look what I can do while I'm here, just wait and see what happens when I'm gone sort of messages. And, he announced, we had 46 records since he's been sitting president. Pretty crazy. I look at the fear and greed index right now. What's the emotion that's driving the market? Extreme greed. Everyone's bullish. No safety nets. A little article came out on Zero Hedge today with all in on quotation marks. Maybe he watches my show because that was my thumbnail yesterday. We were all in. Super bullish. Looking at the Dow Jones futures at this particular point in time, looks like we're going to have another gap up unless if anything changes. You got the Dow 140, US 500 up 17, and so forth down the list. It's crazy. Let's go ahead and get into the indices and kind of just get a good idea as to where we stand in all of this market melt up, market euphoria, market mayhem. Russell 2000. First off, we're going to start off big and kind of zoom in. Monthly time frame, come on. It's crazy. Up 20.33%. Now, mind you, election years and towards the end of the years, Russell 2000 does quite exceptionally well. However, doesn't do this good, especially in a month. This is by far just a monster move to the upside, up 20%. Now, what's interesting here is most people could look at this chart and be like, yeah, this is a very bullish chart. And they'd be right. However, if you understand technicals and technical analysis and certain indicators and so forth, you can look at this chart and say, hey, right now I'm bearish because of the fact of this super overextended rubber band type candle. It's super stretched out. And that's okay to be short-term bearish. And why would you be bearish here? Well, because chances are, why buy at the very point where we're at on a very extended move when we're over the monthly Bollinger Band, right? Over that, and we're so disconnected from the 5 EMA. So yeah, you can see this maybe as a flag pull, and then maybe we consolidate, or maybe we come down a little bit and retest and then move higher. However, going long at this particular point in time offers more of a risk than a reward. All right, I redrew out the weekly time frame, had it as a rising wedge, and we're seeing this kind of blow off top through the rising wedge previous pattern that I drew out. RSI is oversold, big move today, or for the week, I should say, and I redrew it out as this channel dating back here to March, this candle. And you can see this is just a bull channel that it's within, but we're coming back up into this upper portion of the range, extended from the upper Bollinger Bands. It's very hard to time a market top, and not to say that the top is being set forever, but chances are we'll be seeing some aggressive moves to the downside, whether it be in the very near future or after all of this kind of hype and hysteria dies down. I mean, all this news, every Monday we have this monster gap up around vaccine news the last 3 weeks. Then the market really rallied on the Yellen news. It's like, I don't really understand why. It's kind of knew that it was going to be happening, but it rallied. And it's a news-driven kind of euphoric. This is what happens before bull markets typically die, or you see everyone pile in. And in the conclusion section, I'll get into a little bit more. Here it is on the daily time frame, rising wedge pattern. Kind of interesting day today. We finished up 1.88%. The big gap up was helpful to really drive kind of just gap and kind of ramp up throughout the day, and then it kind of camped up where it opened up at. So we saw some hesitation up there at the upper wick here, upper portion of the Bollinger Bands. RSI's overbought, negative divergence in the stochastics. Here it is on the 2-hour time frame. just zoomed in a little bit more, you can see that, we had some hesitation right there on that 2-hour candle. Honestly, looking at the futures market, probably wants to just gap right over it again. But, I mean, you got to consider where we're at right now. The RSI has been fried. Okay, we're super toasty right now, to say the least. Maybe we might come back to the bottom portion of this and then continue to head higher, or we might break through this as it continues to coil tighter and tighter as we move up. Let's look at the S&P 500. Negative divergence on this time frame. What time frame is this? This is the weekly time frame. Why am I pointing this out? Well, first off, the bulls are fully in control here, okay, on these weekly time frames. Why? Is we're looking at this 5 EMA, and it's been a very big struggle for them to really stay or get below it. Now we're moving into this topper range again of the Bollinger Bands and this big resistance. So yeah, like the last 2 previous videos, yeah, everyone's super bullish, or like extremely super bullish, and everyone's all in. Doesn't seem like there's much protection out there. And then on top of all of that, we're just moving into these big areas of resistance. So we got to be careful, got to be patient, because being patient in times like these, it sucks. On the daily time frame, looks like a pretty solid breakout. We mentioned this horizontal line that it really has to get above. Well, look at that. We gapped above it and the daily 5 EMA, right? Clearly. And then we just ramped right up throughout the rest of the day. That's typical to see. Are we going to get hesitation up here at 36.50? Maybe, but we might just gap over that one as well. It's too hard to say how high these markets can really go. But mind you, they're overextended. So they're due for some sort of breath. And typically when we see huge moves to the upside, like I saw in the monthly chart, that monthly candle, it's typical to see 50% retracements of those large moves. Not to say that's going to happen, but it's more than typical. I wouldn't be surprised to see that take place. Here is, remember what we were talking about on the 30-minute time frame for the S&P 500? We said this was that resistance zone. And we wouldn't be shocked to see from way down here if it just gaps above it. Well, it gap right into the center of it, move straight up, and tell me that doesn't look like the perfect bull flag right there. Just the perfect pull on the 30-minute time frame, tracked perfectly sideways. Basically, it looks literally just algorithmic driven almost. They're like, yep, push, 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 and let's just hold it sideways right now and consolidate. And in order to get above this, we're just going to gap above it tomorrow, and then we'll head higher. It's kind of what it seems like, right? RSI, it's a negative divergence-ish. Yeah, I'd call that a negative divergence. Right? I don't know. I'll just call it a negative divergence. It's basically fried right now anyway. We're above 70, and then we have the stochastics overbought too as well. Let's look at the Dow Jones making a $30,000 move today. Hello, all the way up there. We closed at 30,046. I guess it wasn't a $30,000 move, but we did close above 30,000. Wow. Another huge monthly candle, up 13% for the month, moved the monthly time frame into the upper Bollinger Band. When it gets up there, it doesn't do too good, okay? So be mindful, if you're piling in long, and I can't forget to tell you guys this, so I'll just tell you now instead of the conclusion section. But today, I've heard a lot of people reach out to me about individual stocks they should be buying, people that don't usually do that. And that right there was signaling to me, I'm like, interesting. All of a sudden, more news, more bullish news, more euphoria. People are kind of piling in. It's kind of crazy. Maybe I should just go long too with the market, Maybe I should go all in right now. I'm just kidding. Dow Jones on the weekly time frame. Look we got above this resistance level. We're on the upper Bollinger Band also, once again, on the weekly time frame. Pretty strong week. These last couple of weeks tried to get there, couldn't quite do it. So it's going to be interesting to see how the week closes out. We might not close up there. Okay, we still have the opportunity and potential to come down further, but the way it looks right now, particularly, it looks like it's melting up. It looks like this looks like a blow off top, or it looks like just massive euphoria, massive greed pushing into the markets. But we'll see. Daily time frame for the Dow Jones, you can just see all these monster gaps, this vertical crazy movement to the upside. You can call this consolidation if you want. I would call this, I don't even know what I'd call this. That's just that's so much chop. I mean, look at that. Like from way down here, gapped way up here, pushed way up there, then all the way down. Then it came up, and then it came down, and then it just boom, 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 gapped, and then it shot right back down. And now we're seeing, you can look at this. This move right here on this day to this day, Okay, and then we pulled back. Look at this day and this day. Tell me those don't look very similar right there, right? Boom, boom, pull back. Boom, boom. Those candles almost identical. It's kind of in this bull channel. If you draw a trend line from here to there, here to there. Honestly, looking at the futures, it looks like it wants to continue to push higher anyway. So we'll see. We'll see what happens. NASDAQ, 100, monthly time frame, negative divergence. This is obviously longer term. Look at, we get resistance up in this range up here when it taps into the upper Bollinger Band. We saw it right here. We saw that snapback, came back up, got rejected. Month still has some time left, and we've looked at the seasonality chart yesterday where it kind of falls into December. Maybe that might happen, you know, or potentially this is just kind of just chop back and forth, forming a bull flag. Maybe it's going to do this for quite some time. Maybe all the way into 2021 where it's just going to go back and forth, and then it's going to finally break out to make all new highs. It's very, very hard to say right now, but what is easy to say is the risk for going long is not worth the reward at this particular point in time for certain trades. Here's the NASDAQ on the daily time frame. We did the gap up today, and we got above the trend line, and we pushed higher. Kind of saw that. It looked like that was going to be taking place because it was building out this base here. And we said it could look like it was rounding off, but hey, you know, if it didn't fall yet, it looked like strong enough to move to the upside. And now it kind of looks freely like it wants to come test and either close this window up here, but we'll see just how powerful this move actually is. The stochastic is kind of dying off right here, it looks like. But, you know, maybe we put in a new high in the market, at least from right here, beat out here, maybe close this gap a little bit, and then we have negative divergence and possibly overextended on the RSI there. Okay, it's time to look at some indicators. Indicators. Okay, we just looked at price action and, you know, RSI, stochastics, and so forth, but now we're going to be bringing up the warning indicator. Dun, dun, dun. This is the CPC, put to call. This is sentiment. Okay, I like looking at breadth, I like looking at sentiment, I like looking at price action. And then I like to tell the story of what I see. All right, so this is the put to call ratio given to sentiment. When it crosses below the red line, that is the warning sign. When it crosses above, that is quote unquote the sell signal. That does not mean go sell everything, buy a bunch of puts, okay? What it means is if you capture these gains to the upside, congratulations. Make sure you're at least taking some profits away and or putting up a stop loss. Because first off, if you made these, you know, if you bought from the bottom of this big move from September or wherever it was just a couple of weeks ago, and you're up here and you're just holding on, hoping to get, you know, more, and you haven't taken profits, you know, I can tell you this, because people always say this, bears make money, bulls make money, pigs, they get slaughtered. Okay, so you can't be greedy in these environments because eventually the chickens come home to roost. Let's look at the VIX. The VIX, this was the falling wedge. Look at, hey, interesting. We pushed below this level. That looks kind of similar to here. And I thought, hey, maybe we're going to come close this gap that's been bugging me. Now, if it does start breaking and closing below this, that's going to thrust the markets up further. And we need to be pay very close attention to these levels right within this range, because if it acts as a strong support, we might see that, you know, what does Jim Bianco call it? Volmageddon, or somebody calls it Volmageddon, where it comes into these low areas and then you just see it rip up to the upside. And that's what really causes some downwards movement in the indices. Here's the NYMO. Hey, we're making all-time highs, okay? Some really good pushes to the upside. The NYMO is still here. This is overextended, by the way, to the upside. Where we're at like 65, 65.42. That's still not as high as this previous peak. Hey, maybe we push up higher tomorrow, but this is where it closed at. Still a double slash now potentially triple top, whatever you want to call that. We still have the opportunity to thrust downwards. Okay, that's still a valid option. You see these big moves right here. Those are just, you know, those were right near the market bottoms basically, and where you get this thrust to the upside. So we're not quite at those levels yet. So this still pertains as far as seeing a spike to the downside here potentially in the near future. Here's more stuff that's just signaling red hot. This is crazy to me. S&P 500, we're looking at the percent of stocks that make or that are above the 200 period moving average. 90.98% of the stocks in the S&P 500, that is overextended. That is screaming red hot. okay, screaming red hot, and it could hold up there. That's fine. But just notice the thrust forward to it. Notice where we are as far as price action goes and where we stand on all these various indicators and overlays on the charts. 90.98. Should you be going long right now? Potentially, if the chart makes sense. But on certain indices, you can see why we're starting to see a warning sign and starting to see various signals kind of like start to flash red. Now, I could flash red for quite some time, so mind that. And then we got the 50 period right down here. 80.56% of the stocks in the S&P 500 are above the 50 period moving average. When both of these hit these levels, you typically see downwards momentums in the S&P 500 in the near future. Here is the NASDAQ 100. We're looking at the percent of stocks above the 200 period that make up the NASDAQ 100. 86%. It could hold up there for a while. It has been. But that's still an overextended number right there. Okay, when it reaches these levels, I put out blue vertical lines, you see pullbacks. Right? Yeah, they can go higher and higher, but then typically you see some sort of violent, aggressive move to the downside. All right, so like I said, I'll get more into in the conclusion section, but let's go over commodities. Hello, gold breaking down, probably the only thing that's not up on the day. Stochastic oversold. I get these always mixed up. I always say overbought or oversold, and I always mix them up. Came into the pink box here, touched down on the 200 period moving average, and broke through this lower trend line. Looks pretty bearish to me. I picked up a couple ounces. I held it true to what I've been saying. If it pulls into my buy zone, I'm going to be buying it. I didn't buy it yesterday. I felt like it was going to break down further, broke down further, and I still think that there's potential for downside movement into around 1760, 1770, all the way down to 1750. Okay, so I'll be a buyer around there too as well. And then the more and more that it drops, I'll be probably picking up or scaling in. It just depends on, the aggressiveness of the move and where the RSI is. RSI is kind of moving into that oversold territory. So this, to me, is just an opportunity to pick up, to basically just move a little bit of cash outside of my cash and into something else. Okay, silver, this looks like it's headed lower, to say the least. The MACD crossed over, is looking pretty bearish. Looks like it wants to come hit this lower trend line at around 2250, but it's still kind of within this pattern, so I figured to keep it up. 50 period, struggling to get above that, and obviously this neckline too. That's going to be some work for silver. Crude oil, on the other hand, broke out of our risk range, that topper range, and what do you know? It squeezed up to right around 44.91. Looks like it wants to go test that 45 and get above that. This, to me, looks pretty darn solid of a move. Looks like it's going to be heading higher and wants to move higher. Okay, this is a high since back all the way till, let's think March, basically, mid-March. But yeah, it finally just broke out of a range that was been trading in since August, since June, whenever it got into this gray box there. Bitcoin is the shining star still. Just a parabolic move to the upside. It wants to reach 20,000. Everyone wants to see it there. And now I feel like people are getting real antsy. They're like, well, if it does break 20,000, what's to stop it from getting to 50,000, 100,000, 200, $1 million? Okay, parabolic move to the upside. Just week after week. This is the weekly time frame. Green candle, green candle, green candle. Looks just a solid breakout. Like, very good. But now we're going to be running into some resistance. RSI is cooked. 85.34. We'll probably see some volatile movements. Like I said, it's typical to see on breakouts 50% retracements, and even to 68.1 if it's even more aggressive, but it's likely. So that means that we can always see this come back down to 15,000. That doesn't take away from this pattern, but just know that the parabolic moves never go up forever like this. This is very similar. So this was into 2018. Right? So from 2017 to 18, we're in around the same time frame, coming to the end of the year, moving up just as parabolic as we did there. Okay? So interesting time frame and just interesting movement as far as price action goes too as well. Let's look at the dollar. Not much to report here. Still struggling to hold above there. A lot of people believe, okay, Yellen's coming in as Treasury Secretary. Goodbye dollar. It's going to go fall. It's going to fall further down. Look at, I'm not an economist. I don't quite understand, their analytical view on things. But from a price action standpoint, like I said, this looks like it's walking off a diving board right now. But it's still holding 92. So 92, there's clearly, support right there. Now, if we start breaking below that, yeah, I think we're going to start heading lower. Bearish trend in the MACD. RSI is not giving us much, but it is trending between 30 and 50, so it's a bearish trend overall. Maybe we might get surprised. What I find interesting is the dollar was down today, and gold was pretty significantly down too, so kind of makes me think, hey, we might be starting to catch a bid here soon if gold and silver start rallying while this dollar, or sorry, catch a bid in gold if we start seeing the dollar start to go through this level. So I don't know, maybe. Yields. Really think not much going on here. It seems like we're just on a risk on type of play. So we saw yields rise a little bit. We're still breaking through this falling or rising wedge right here. So I just kept this up just to see if it does come hit that target. This is a 30 minus 5. The more widely tracked one is the 10 minus 2. This is the spread, and we're still following this trend to the upside. We see a little kind of bounce from there. 30 years, the only one that broke through it temporarily, but it might be somewhat of a false breakout, and we might start heading higher. You know, we'll see. It looks to me like, and what feels to me like, is yields are going to be heading lower and or sideways. Maybe they're going to be heading higher. I mean, they've been trending higher since August. So, you know, we'll keep an eye there. Let's wrap it up. Let's wrap it all. Let's put it all in a little bow and tie it up. Conclusion section. All right. Right now, for me particularly, I'm short-term bearish in a bull market. Why am I short-term bearish in a bull market? Well, it's just where the price action lays. It's what the indicators tell me. It's that simple, okay? A lot of people might say, well, why would you be so bearish when everything's so bullish? That's like, go back to my original sentence that I said, where I said bears make money, bulls make money, and no, I didn't create that, and then pigs get slaughtered. You got to understand, just because we've seen these moves that are very bullish doesn't mean that you can't be very profitable as a bear. I just don't want to move larger amounts of money into something that's so overextended. Can it go higher? Yes, but like I like to remind everybody, okay, remember the March crash, 3 months ago, 5 months ago, whatever it was. If 2020 feels like 40 years ago, but it's still here, we're still in it. It took 4 weeks, 3-4 weeks to wipe out 4 years of progress. So I don't care that I'm missing out these little gains. I personally think that the market's going to be coming back to test a lot of these key levels, and I don't think that these gaps that were just projected all the way up to the upside aren't going to be filled. I do think that we're going to have a lot more volatility here in the near future, so I am preparing myself for that. Like I said, you're probably starting to feel the squeeze if you've been out of the market. You're probably getting that, you know what, maybe I should just go in. Maybe I should just do it now. Let me tell you this. That is what the market does. That's what the market's very good at doing. It's good at sucking in the worst type of bears, the perma bears, at the very last second, and it's just very good at, creating so much euphoria, creating so much hype, and then taking in all these investors and then flipping the switch in just of a snap of the finger. Just got to be careful. Got to be careful. Really, also, too, a couple charts just very quickly. Semiconductors continue to push higher. This is one industry that I'm actually looking to short just because of the negative divergence. Price action's kind of extended. Haven't really. I actually did short one of those stocks, and it's ramping up on me. So I'm not really too worried about it. It was a very inexpensive put position, a long put position, and then we also have the transports breaking up to new highs, also on a negative divergence too as well. The reason why I show these two indexes is simply because they make up, one, a lot from the Dow Jones, and then two, a lot from the NASDAQ 100. So if we see these semis struggle or the transport struggle here in the near future, it's very likely to see the indices struggle as well. All right, that's all I have for you today. Sorry for my big rambling on. Everyone have a great day. Hasta la vista. Toodaloo.